the wants have to be reduced, and you must look at areas that you are comfortable or you know you need to reduce. So here's a list of all the areas that you want to review. So when it's a need, you're looking at your housing, which is rent or mortgage, utility bills, groceries, gas for car, and insurance. When it's a want, and right now, these wants, even though we want them, we can't even have them. So for example, dinner's out, we can't go out for dinner, but we can certainly order in. Movie tickets, haircuts, definitely we can't have that. Maybe even looking at our cell phone data plans that we have, cable TV packages. Some of those are totally wants, and you may need to look at and say, what can I do? First of all, it's really a good idea to create a budget that suits your situation for right now. Most of us have budgets that we've created a long time ago. When it comes to a budget, you really should be doing one on a monthly basis because this is ongoing. So old school, it'll show you right here. Old school is more like paper and pen. You write everything down. And then there's the new school, which is the online tools. And one of the most popular applications that's out there. It's called the YNAB, and it actually helps you go through the whole process of budgeting. And it is not free. I have to let you know. There is a fee for that, so you'll have to register and pay for it. It could be monthly or annually. Then there's also the booklet that we normally give out when we do workshops, and it is part of the handouts that you're given today. It's called the monthly budget tracker. It's the same thing as pen and paper, but this is a little bit more organized in the sense that it will allow you to record each and every expense as you're spending on a daily basis. Because it's broken down in a weekly basis, you'll be able to see and add it up, and it does have a monthly summary, which you will be able to see where you've been spending your money and how, and that'll give you a better idea of where you can cut back. So the other product that I think you might want to check out is our budget planner, which is online, and it records absolutely everything that you put in, and it will allow you, it does the math for you, which is the most important part. And then you'll be able to see exactly if you have a surplus or a deficit. Again, I understand that when we talk about, creating a budget, a spending plan, or a cash flow, it can be very challenging for all of us because sometimes we just don't want to know, what we're spending. We know we're spending, but we don't want to know. But it's super important to understand that once you know where your money's going, then you'll have the true control that you want, which means that you'll know how or where to cut back, who to contact to reduce some of your expenses. And that's the most important part. So we've also are giving you the monthly expense worksheet, which this is a very simple form. You write down your income right here, and then your fixed expenses. And this is the area that I like the most, which is going to show you the flexible expenses. And then you'll be able to do the math, which is the total monthly income. You write down less your fixed expense, less your variables, and then you'll have your surplus. So as I'm walking you through this, one of my challenges right now is to kind of walk you through how to create your crisis budget. So this is where we're going. Now remember, plan A normally has some sort of hiccup, and then you go on to plan B. And because life happens, there's tons of surprises. Sometimes you get separated, you have an illness, or you lose your job. Those are things that are beyond your control. And this is why we need to look at how to create a crisis budget. And it doesn't have to be COVID budget, just to be clear. A crisis could be absolutely anything at any time. So here's the example that we have for you. I have two sides. We have the regular spending budget, and then we have the crisis budget. So when we look at the regular one, it's a person who's earning an income of $4,000 a month, and these are monthly expenses that we're talking about. If you live in Toronto, then you're looking at the fact that rent can be anywhere above $900 to $3,000 a month. We decided to go with $1,500 because this is just a sample. So we look at so when you're looking at areas to reduce, you ask yourself, what can I do that I can defer temporarily? And so right now, because of all the government services and programs that have been created because of COVID, we can defer payments. So rent can be deferred, car payments can be deferred, and then we look at other areas. For example, when we're in lockdown or we're self-isolating, it means that we're not going to be using the car as much, or we're not going to be getting gas as often as we were, meals out or entertainment. Those are the areas you want to look at, and you want to see, how can I reduce that? That makes it uh, easy for me to handle at this time, since my income has been reduced considerably. So we also want to ask, okay, can I also look at cable, cell phone, insurance? Can I contact them? And those are probably, the one thing that we tend to not do is because we're a bit intimidated of reaching out to the service providers. So my suggestion is always, just, what's the worst that can happen? They can say no, sure, but at least you tried. Or, hey, maybe you will get a reduction of, even if it's $20, it makes a difference. So what other areas that you can cut back? Well, right now, the stores aren't open, so you're not going out. Do you really need new clothes? The gym, they're not charging you, or if they are charging you, you can call them and ask them to stop charging you because you're not using their facilities or services. So I want to show you quickly how the budget works here, because one of the things that we want to make sure that you do is that you know that right now you have rent has been deferred, um, car payments have been deferred, car maintenance have been deferred, and there's other areas that have actually not been reduced, but it's actually increased. And what do I mean by that? And I think we all understand this. We're at home, we're eating a lot more. So therefore our groceries have gone up, but also the prices have gone up. So, and that's just for everybody, regardless of where you shop. So if you could just see right here that groceries were, oh, let me go back. Groceries were 350 in good times, and now they're $500. That can be a significant amount. But I also want to point this out, which means that your total expenses have reduced from 3,800 to 1,400, because remember, you're deferring the rent, car payment, and other expenses have been reduced. So you also have a surplus of about $600. Here's the warning. These are just temporary. Right now, you've actually have permission to defer your payments, which means that for now, you don't have to pay them, but you will have to pay them once this deferral ends. And this is why it's very important to keep in mind that those $600 that you're saving up right now, or that you have extra, you need to save them up. Because once the regular payments are expected from you, you need to come up with the money. So work out your options. Figure out what can you reduce or give up for the time being. It's just temporary. It's just for now. So we're moving on to understanding your credit reports. Are there any questions so far? It's about budgeting, because I just want to make sure I answer anything before I move on to understanding your credit rating and your credit report. Are we good?
We'll open it up at the Q&A at the end.
Okay, sure, excellent. So here's I wanted to go over understanding your credit rating. So there's the understanding your credit rating and then understanding your credit report. And I'm going to go through your credit rating first, and then we're going to go through your credit report, your credit score. So this is a credit rating that's standard for North America. I believe that there's different ones in all over the world, but this is the one we're dealing with right now. It's rated from 0 to 9, and 0 means that you don't have any information on your credit report because you're either new to the country, you've never had credit, or you've never applied for credit, or you just under 16, which means you can't apply for credit. A 1 means that you have credit and you're making your payments on time all the time, so you're doing very, very well. And oh, someone's raised their hand. Hi, Otis. Uh, do we want to deal with the hand raising? No?
Please post your questions in the Q&A.
Oh, then that's fine. Then we'll deal with it then, right?
We'll answer it at the end of the presentation.
Oh, excellent. Okay. So we'll move on to R2, which means that because you have credit and maybe you've been late with your payment, which means you either your due date was on the 5th and you made your payment on the 8th or the 9th, you're late, or you were supposed to pay $30 and you paid $29.50, you're late. And that makes you 1 month behind. An R3 means you're 2 months behind, which means that you're more than 60 days behind, or again, you haven't made your full minimum payment. An R4 means you're 3 months behind. Again, you're just falling behind either because you're not making your full minimum payment or you just haven't made your payments in the last 3 months. And then it goes up to the R5, where at this point the creditors have said, along the way, like every time you're late with your payments, you'll get a notification on either on your statement, or if you're past 2 months, you'll get a phone call, or you'll get an email saying you are late with your payments. What's going on? But by the time you get to NAR 5, the creditors are saying, look, we've tried everything, and we haven't heard from you. So your account is now an R5, which means that if we don't hear from you in the next few days, we will then have to basically re-age your account, which means that they're going to change your status from an R5 to an R9, which is right here. It means that this account is now considered a bad debt. And what does that mean? It means that the creditors have taken your account and transferred it to a collection agency, and the collection agency is now contacting you and asking for the payments. And that's something that you want to keep in mind, that, when you're from an R1 to an R4, you can really talk to the creditors and figure out a repayment schedule that can work for both of you. But once you are past the R5, this information, your credit cards, your credit loans, whatever outstanding credit product you have, will be transferred to a 9. And this information stays on your file for 6 years from the last date of activity. What does that mean? It means that, let's say today you paid everything off. 6 years from today, that information will be deleted from your file. So if you haven't paid for the next 3 years, so 3 years from that date, you add 6 more years to that 3 years. So that's around 9 years that your credit file isn't in good standing. So be very careful as to how you're managing your debts from that perspective. I do want to go into just to show you how it really just kind of flows when you're getting yourself delayed from making your payments. This is what your credit report will look like. As a matter of fact, this is from TransUnion, just to let you know. And this is just a sample of what we're going to be talking about. When you're checking your credit report, you will see this on your the way it's broken down. The first thing that I wanted to show you was your account. It shows that you have revolving accounts, installment accounts, and other accounts. Now, revolving accounts would be a credit card from a Visa, a MasterCard. It could also be retail credit cards. That's why it's called revolving, because it allows you to carry a balance on a monthly basis. And then we're talking about installment accounts. Those are accounts like a car loan, a personal, where you're expected to make a regular monthly payment, always on the same date and the same amount until the debt's paid off. And then we have other accounts, which are called open accounts. And that would be an account such as an American Express, where you are expected to pay the full outstanding balance. That's a charge card. So if you borrow $100 at the end of the month, you're expected to pay the full $100. It's not expected in installments. This is the way they break down the credit score. And that's what a lot of us are always asking. What's my credit score? What's my credit score? Where am I standing? So here it is. For TransUnion, the credit score ranges from 300, you'll see it right here, I can't highlight it, okay, right here, 300 all the way to 900. So when we look at 300 to 692, it means that your credit rating is not in good standing. And your credit score is not in good standing. And what does that mean? It means you probably don't have any information, or it's very new. It means you probably filed for bankruptcy or consumer proposal. You've defaulted on your debts, and that information is part of your credit score. When we move up to the 693 to 742, it means that you're making your payments, but you're probably borrowed quite a bit, and I'll walk you through that in a moment. And but you know what? The creditors are willing to talk to you and give you more credit. From 743 to 789, it means that, you know what? You're carrying credit, you're managing it, but you're struggling. But anything around the 790 to the 900 means you're doing really well, and the creditors really like you because it means you're not a high risk. So a lot of people tend to ask us, well, how does it really work? Like, what's the formula? Like, how could I, put in the numbers to figure it out? There really isn't a specific formula. It's not a standard formula for everybody because it's actually very specific to you. So for example, I've lived here all my life. I've had credit since I was 18. Therefore, my formula would be different from someone who has just gotten credit 6 months ago. So everything is being viewed from a very specific point of view. So for example, we look at the credit formula includes your payment history, your credit utilization, the length of history, the account mix, and inquiry. So let me explain how that works. So payment history just means like, how long have you had this credit card, this loan? That's a 35% of the formula. Then we look at the credit utilization. And what that means is you have credit, but how are you using it? Are you using all of it, or you're not using any of it at all? So what I mean by that is, like, if you have a credit card with a credit limit of $5,000, but you've only used $500, then that means you are at 10% utilization of that credit card. Then there's also the fact that, hey, you have a $5,000 credit limit on your credit card, but you're using $2,500. That's 50%. And then you have a credit card of $5,000 and you're using $4,500. You're at 90% utilization. And what does that mean? It means that if you're anywhere between 0 to 35%, it's considered a low risk. It means that, you know what, that if anything happens, you'll still be able to pay your credit card off without a problem. Credit risk, which is medium risk, it's about 35 to 70%. And what does that mean? That, you know what, should anything happen, should you lose your job or anything like that, you might struggle to pay it off, but you will pay it off. And then we look at the one that's high risk, which is 70 to 90%. They're saying, well, what if you lose your job? Will you be able to pay this debt off? Will you be able to make your monthly payments like you're supposed to? Most likely not, because there's no money coming in. So that's something that this is why that particular formula or the percentage is very important when they're calculating your credit score. Then we look at the length of history. Again, this is what I talked about earlier. I've been here all my life, which means that I have I have credit for a lot longer period of time. So if I've had it for over 15 years, a credit card, they could go back and say, hey, she's a good payer, or no, we don't trust her. It could go either way. But if someone who's just attained a credit card in the last 6 months, the history doesn't go far back enough. Therefore, for them, they may think, okay, well, it's not long enough a history. And then we have a look at the credit mix, and you notice that it's only 10%. So a lot of people ask, well, should I have a lot more credit? Should I get like 3 more credit cards? Should I get a loan? Should I get a car loan? What should I have in order for me to have or get a better credit score? We always say, be very careful, because yes, that is part of the credit score formula, but you notice that it's a very small part. So if you have one credit card and you maintain your payments and you keep up with your full responsibilities, it'll be okay. If you have two, that's okay. But if you end up getting, like a car loan, a personal loan, 3 credit cards, That's a good mix, yeah, but can you manage that debt? And that's something that you always have to be very cautious about. So we go back to the accounts, and now you understand that what the formula is, and you could see the whole thing. The next part of that is actually the inquiries. And what that means is that every time you apply for a credit card or a loan, that's an inquiry. It means that someone is checking your file, and that is 10%. So the more inquiries you have, which means that the more loans that you've applied to, it may bring your score down. So what about COVID-19? And that's something that everyone's asking. It's the same setup. The only difference is what happens when you defer your payments. So for some credit, so by the way, when you're looking at your credit report, you'll be able to see that right here. Um, it'll show the date, and it'll also show your score, 819. We got that as a sample, by the way. What happens with your credit score when you defer your payments? It's a really good question because I want to make sure that if you have gotten permission from your bank to defer a payment, your credit score should be in good standing. However, if not, then you will be considered delinquent. Or maybe not. So credit utilization, again, we're looking at the fact that if you're getting a payment deferral, the best idea is stop using your credit card so that you can actually bring down those the balances. We're looking at that as, again, just to make sure that you get the credit utilization formula. So a lot of people tend to ask, well, where do I go? What do I do? How do I know what my credit score is? There are two credit bureaus in Canada. It's Equifax and TransUnion. And you can actually go on their website and check your credit report. The reason I have disputes right here is because there's a lot of people who, when they check their credit report, they see that they have credit cards or loans that they have never applied for. That may be because your account has been tampered with, which means it's compromised. It means that there's some issue like identity theft. Someone has taken your information and taken out debt, or you've actually paid off the credit card. Everything is in good standing. You have a record of everything, but the information was recorded wrong. So there's so many reasons that there could be a need to dispute the information that's on Equifax and TransUnion. So I've actually provided handouts on how to apply for that dispute. There's the application as a handout that you may want to check out and submit if there is an issue with your credit report. If you are still thinking, well, you know what, I'm very confused about this credit rating, credit report, should I ask someone to help me? Absolutely. We're here to help you, especially if you have questions when it comes to anything that has to do with your debts. Well, I like to talk about the warning signs of your credit rating, of your debts, just because it's so important to understand that COVID-19 just happened, but maybe before COVID-19, you had difficulty paying your bills. Maybe you weren't able to sleep. You were having some anxiety or stress, and that can happen. We've seen clients that come to us. I mean, I've been with Credit Canada for a long time, and I've heard clients say, you know, I haven't been eating well. I've been feeling very ill. And then once they resolve their debt problems, they're like, finally, I'll be able to sleep because they feel good. Um, other warning signs that could be popping up and you're not understanding why this is happening to you is that, you know, maybe you're arguing with your spouse or someone that you co-signed a debt with and they're not meeting their responsibilities. So that could be a warning sign that you may need to pay attention to. And the last point is, are you receiving phone calls from collection agencies, from your creditors, or telling you that you're behind with your payments and asking when they can expect a payment? So those are all warning signs that can certainly create a lot of stress in your life. Here's something that I wanted to walk you through. So when we're thinking about debts, what's the first thing that comes to your mind? Does it make you anxious? Does it make you stress out? Or you're thinking, well, you know what? I have my debt and I'm managing and I'm okay with it. There's all sorts of emotions that are involved when it comes to debts, but I just want to make sure that you understand that you're not alone and that we're here to help you, whether you speak to Otis or to a financial institution, to an accountant, whoever you wish to speak to, just make sure that you know that you have help. Here's some questions I wanted to ask. It's true or false? Can a creditor come to your house? No, they can't. Can a creditor call your neighbor? Nope. Do creditors report every month to the credit bureaus? Yes, they do. So every month your information gets reported and updated onto your credit report. Question for you again. Does anyone know what the maximum interest rate that you can be charged, the legal maximum interest rate? Think about that for a second. You're probably looking at your credit statements or your bills and looking at the interest rate right now and thinking, hey, I'm paying 19, 24, even 32%. I'm sure that's probably the highest amount. Just a moment. It's actually 60%. So for those of you that didn't know that the maximum interest rate that you could be legally charged, now you know. Anything above 60%, it's considered a criminal offense, and you need to know that so that there is a law about that. So be very careful as to the type of loans that you're borrowing, and make sure you ask, what's the interest rate that I'm being charged? How much is it going to cost me? Again, COVID and crisis pushes us to go out and get loans. And one of the things that we see is that people who have um, a credit score that's not in the 800s or the 700s tend to gravitate to companies that will charge them a high interest rate. So be very careful. I want you to understand how that works. High interest rates are calculated in a very specific way, and they're called the annual percentage rate. Here, if you do the math on any of those interest rates, whether it's a low interest rate or a really high one, the formula works the same way. And this is the formula, just so that I could walk you through. So sometimes, like when I see formulas like this, when I was in high school, I was like, no, I don't want to know. But we do want to know because it's costing us money. And you want to understand exactly how to figure that out. I want to walk you through a sample on this. If you were to borrow $5,000 today, and the repayment is going to be $133, and you're going to be paying that every 2 weeks, bi-weekly, how long will it take you to pay this off? 60 months? That's 5 years. Well, let's do the math. So if I was to figure out the math to check out the interest rate, I'm looking at $133.45 and multiply that by 26 and then multiply that by 5. And I'm going to get $17,348. So $5,000 in 5 years is actually going to cost me $17,348.50. That equals to about 45% interest rate. So you could see that, and I know, just like you, when you need something, you're just so glad you get that loan. But at the end of the day, you need to ask yourself, is it worth it? Because it's going to cost you a long time. Sorry, it's going to cost you a lot, and it's going to take you a long time to pay it off. So remember I talked about the 60%. Here's something that you want to ask yourself. Have you ever been tempted to consider a payday loan as an alternative to borrowing money? Well, yeah, we all have, right? We need that extra money and we need it today. So we're not thinking about the cost. Payday loans, you think, well, yeah, they're right there. They're easy to access. You're right. They are. But let's talk about how much is it really going to cost you. So, and this is actually coming from the Ministry of Government and Consumer Services. So you could actually go to their website and check this out. And if you were to borrow $300 for the next 2 weeks, according to this, it's they charge you a $15 fee for each $100 that you borrow. So for the 300, you are going to be paying $45. If you were to borrow that same amount and get a cash advance, you would only be paying $6.15. It's a big difference. Okay. Now remember I said fee. Payday loans are not charging you interest, they're charging you a fee. And that's the reason that they don't fall under the 60% law of the criminal offense. So they, under the Ontario law, the maximum they can charge you a fee of borrowing money is $15 per each 100. So I wanted to show you the formula if you were to borrow this for 1 year. So if you were to borrow $100 for 26 pay periods, and basically the loan itself is going to cost you $390. So you multiply $15 times 26, it equals to 390. So that's 390% when we really calculate it as a percentage wise. And so on top of your $100, so that's $400. That's 4 times of what you borrowed the money. And that's in 1 year only. So keep that in mind when you're considering borrowing from creditors that are charging you a high interest rate. If you have a concern, if you have a complaint, you may want to visit the Ministry of Consumer Services, just because they'll walk you through the process and you'll be able to ask them any other questions you have with regards to the payday loan companies. How do you communicate with creditors? So right now you have a credit card that's outstanding and you haven't been able to pay it back. There's 2 questions that I have. So first important question, who's calling who? So if you're in good standing, you're probably calling the creditors and trying to figure out a repayment schedule. If you're not in good standing, then the creditor's calling you. So let's look at the first situation that you're reaching out to the creditors. So you've got the you got a loan or credit card and you signed the agreement, so you know exactly what you signed. I'm going to tell you that there's a lot of clients who, when they sign the agreement, they just sign the agreement. They don't take the time to read it. And that happens to a lot of us because it's very fine print and you're like so excited you got the loan and you're just signing away. But, next time you do sign on a document, make sure you read it. Take your time. So if you signed an agreement for a mortgage, a loan, or a credit card, make sure you read it. The agreement has a variety of terms that you need to understand. And if you don't understand, underline and ask the person who's giving you this loan, what does that mean? How long is it going to cost? How long is it going to take me to pay you back? And how much is it going to cost me? Of course, this is, we've all been talking about the coronavirus, and this is what it looks like. And of course, it's changed our times and it's changed our finances and the economy globally. So what do we do now? Your budget is not allowing you to pay back your debts, and and everything has stopped. You got to go back and look at those terms to understand that if there's any other way of repaying back your debts. Do they have any opportunities to redo the terms? Right now we have the opportunity to ask the creditors to defer payments. So there's so many things that we can do right now, and all you have to do is reach out to the creditors and ask for those type of deferral repayment schedules that they're offering. The creditors want to hear from you. Believe it or not, they want to help you. So the best thing that you could do is reach out to them and discuss your situation with them. Now, I put a little star there, and the reason I did that is because I want to make sure I'm very, very clear is that there's a very big difference between a payment deferral and skipping a payment. So when we talk about payment deferrals, you can call your bank and ask that your mortgage, your loans, your credit cards be deferred, which means that you're actually signing a new agreement allowing you to not pay for the next 2 or 4 months. However, the length of time that you've been provided. If you decide to skip a payment just because you're hearing, hey, there's a payment deferral and everyone's been approved, then by skipping a payment, you're actually late with your payments. which means that once you're ready to ask for that payment deferral, unless you catch up with the minimum payment, you may not qualify for a payment deferral. So please be very, very careful when you, by understanding that there's a difference between a payment deferral and skipping a payment. Once you've actually just, qualified for that payment deferral, make sure you get something in writing, because a lot of the times we're just so happy about it, but you just say, you know what, record all the conversation, record everything so that you have something that you can go back to and prove to the creditor that, yeah, I have a contract with you. This was what was agreed upon. So when we assume at this point is that because you've reached out to the creditors, your credit um, report, your credit score is still in good standing because you've been making your monthly payments all the time. So this is important to know that that's why you qualify for those payment deferrals. Now, the second situation that I pointed out, it's like, so maybe they're reaching out to you, maybe they're calling you, the creditors are calling you, the collection agencies are calling you. What can we do? So here's the thing. Tip number one, when you're dealing with a creditor, make sure that if possible, call the creditor directly. And because even though your account has gone to collections, sometimes they have in-house collections and then they have outside collections. So if the creditor has an in-house collections, you're still with a creditor. If it's been forwarded to a collection agency, then you may want to just go back to the original creditor and work out a repayment schedule that you can. Explain your situation. A lot of the times we get nervous, we say one story, and then they'll call, someone else will call again. And if you're consistent, it'll always be the same story because it's true. Because you know what, people do take notes and they will write that on your file. Stay calm. And this is the best advice I could give you, because some collection agencies or some creditors will call and maybe they too are under stress and maybe their tone may not be as friendly as you'd like. So stay calm, because we're all under stress. So just, if you can't talk to the person, then just say, you know what, let's talk later, and hang up. You have the right to ask as many questions as you need to ask, because you need to understand about the actual debt. So you need to know who's calling you, why they're calling, and you have the right to expect a statement of claim if they're telling you they've already sent you one. Because if you haven't received it, then, actually the courts are closed right now, so no one's getting any statement of claims or evictions. When you're speaking to the creditor or the collection agent, make sure you write down all the details. You take down the name of the person, their employee number, you write down the date, the time, all that. Why? Because it's going to help you when you go back to your notes, and if someone new calls you and says, well, Elena, we called you yesterday. It's like, yep, you did. And I spoke to Tony, and Tony said this and this and this, and you could prove what time you called. And they're like, yeah, you're right. Sorry about that. And, everything will be fine. But if you can't prove it, it's a little harder to have this conversation. Make sure you read and save all of your mail and emails. And what do I mean by that? A lot of the times we get the statements, the bills, all sorts of letters from the creditors. And what we do is we just go, I'm just not ready to open the envelope right now or look at that. Because you know what? I don't blame you. It's a bit intimidating and also overwhelming as to what you're going to read and what you're going to find out, and you don't want to deal with it at this time. I get it. But don't throw away the envelope. Open it, read it, because there might be information there that you didn't know that you could have access to. And if you get emails from your creditors, make sure you keep those too, because you want to keep everything for your records. And now this is the fun part, where we call it, let's try to make a deal. This is where you start to negotiate with the creditors. What can you afford to pay back? And you got to be very realistic. And this is where you go right back to your budget and look at it and say, well, what can I really afford to pay you back? And can I afford to pay you back? A lot of the creditors are going to maybe push a little bit and say, we want X. And you say, no, I can't give you X. I can only give you Y. And you have to be honest and realistic, because at the end of the day, whatever you agree to, they're going to come back and say, you agreed to that. So it's the same thing that I talked about. It's like, make sure you agree to the amount that you can truly afford. I keep going back about the budget. Um, really, unless you know what comes in and what goes down, how much money you have left over, there's not much you can do. And there's no way that you can go back to any of your creditors and say, look, let's work this through. Like I said, let's make a deal. Once you've reached some sort of compromise and you've negotiated the amount that you're both have agreed that needs to be paid, then get that in writing. Get the creditor or collection agency to send you a letter or an email indicating that this was agreed upon on the date and the time and the amount, and that they're not going to come after you for anything else. Unless you have that in writing, then you can't send any money to anybody, because at the end of the day, if you didn't have anything in writing, the creditor can come back and say, well, show me proof. Prove to me that I gave you something in writing that we had agreed on X. So make sure you always have something in writing. If you're unable to talk to your creditors because you feel overwhelmed, you get nervous, or you just don't know what to say, give us a call. That's what we're here for. We're happy to help. You got to think about your future. And what do I mean by that? I mean that you got to think about your future credit scores. So if you're trying to catch up with any of your delinquent payments, trying to pay off collection agencies, make sure that the creditor agrees to remove any negative information from your credit report, credit score. The reason you want to make sure you have something in writing is because you could always go back to the credit bureau and say, look, I have something in writing that they were going to remove this negative information. They haven't, they'll investigate it. That's part of the dispute process. If you've been late with your payments, it will affect your credit report and it will stay there. I know it says there's 7 years, but because of the number of months or years that you have been late, plus the 6 years. Remember that you have rights, and the collection agencies also needs to respect that you have rights, and anything that you're being told or any misinformation, you can actually file a complaint. So we provided you informations in the handouts where you can actually find out more information about collection agencies and let's go back a little bit. Any information that any questions that you have with regards to collection agencies, you can visit the Ministry of Consumers and Government Services. So on that note, now I'm moving on to the questions, and here we go.
Thank you,
Any questions? Oh, you're welcome.
for that presentation and those insightful tips. Now we'll move on to the question and answer section of this presentation. And just a reminder to please place your question in the Q&A section of on the menu bar at the bottom of your screen. And that way we can get to it, and we'll try to get as many questions as we can in the last few minutes of this webinar. So to begin with, there is a question here about do both Equifax and TransUnion calculate credit score the same? Does it matter which institution or credit bureau you get your report from?
Actually, they don't calculate the same, and the number is totally different. So for example, Equifax is from 300 to 800, while TransUnion is 300 to 900. The other thing that they have to keep in mind is that some creditors will report only to Equifax or TransUnion. Not all of them report to both credit bureaus. So it's very important to check both credit bureaus, because sometimes there's information on one that there's no information on the other. And also you want to make sure that your information hasn't been compromised in both. That way, by checking both, you know that nothing's been compromised.
Okay. And what are some of the ways to build credit without using a credit card?
That's a trick question. There is no real other way aside from having a credit card. So a lot of people get those prepaid credit cards thinking, well, I have a credit card now. Well, not really, because you're using your own money to pay to use that credit card, and that information is never reported. So if you're trying to reestablish yourself, you're looking for a secured credit card. So there's some banks that will offer that. Like, for example, Capital One is one of the most popular banks right now that will offer you a secured credit card. You'll have to give them a security deposit, and then the credit card you use just like a regular credit card. Within the year, if they see that you've managed your credit card well, where you've always made your payments on time and you haven't overused, they will then transfer you to a regular credit card. Basically, it's like they'll remove some information from that credit card, but you get your money back, which is great, plus any interest you've earned during that year. And then the credit card you get to use as regular. And that's a great way to start to reestablish your credit rating. Or you could always get a personal loan, or an RRSP loan, which again, it's great for two reasons. RRSP, you're saving money for your retirement, and you're paying it, and you're also allowing yourself to create a credit rating for yourself.
Okay. You mentioned that your creditors report every month. Do utility companies report every month as well?
No. So utility, like hydro, gas, they'll only report if your account has gone into default and they've already cut your services. That's when. Now, however, like I know that cell phones are now reporting, so that's something that you do need to be aware. Mortgages are also being reported now on your credit report. Again, they just calculate that a little bit different, but just a lot of things are being reported now, more now than before.
Okay. There's a question about lump sum payments. Are these best in order to settle debt when you've struggled to make payments? Are lump sum payments a best option to do?
Yeah, so for sure. Like, so for example, like I said earlier, let's do a deal. That would be you negotiating a settlement on the loan or the credit card that's outstanding. And yeah, those are great, but make sure you get something in writing, and make sure that you can listen. When you're holding on to the money, you can ask for just about anything, which means that you could say, look, I want you to, accept X amount of money. I want you to remove information from my credit report. I want, I want. But if you've handed over the money and then you ask for all those things, they won't give you. But you can ask prior to paying off the debt for anything that you ask for.
If you consolidate your debt, will it be hard to get a credit card after it is all paid off?
So that's a really good question, because when you consolidate your debts directly with the bank, your credit rating is still in good standing. So once you are debt free, you are actually considered a very good credit risk, which means that anyone will want to give you credit. But if you consolidate your payment or anything like that, your credit rating will be affected. The only time that your credit rating is not affected is when you deal with the creditors directly and you make your payments directly to the creditors.
Okay. And what if I pay my credit card every 2 weeks? Does it affect my credit score badly?
If you're making your payments to your credit cards every 2 weeks, as long as you're making your payments before the deadline or the due date, the full minimum payment that's required, and then you're adding to that, that's fine. But a lot of people just try to pay whenever they want to. You have to really pay attention to that due date, because that due date is the most important part, along with the minimum payment. So if you're paying, if your due date is on the 15th and you're making your first payment on the 5th of the month, and you're paid 200 and your minimum payment was 100, you're good to go. That's excellent. That means you're actually paying off your debt a lot faster. But if you're not, if your due date was on the 5th and you're actually paying on the 10th and then on the 20th, you're late, and that can affect your credit score.
So here's another question of how often should I check my credit rating or check my credit report? There is a charge for this, so how can I avoid it?
So good point. You should check it at least once a year. Definitely. You don't want to check it all the time. Now, a lot of the financial institutions, so if you're banking online and you go on your computer and you check your account, your bank account, there is an area there that will actually allow you to check your credit score, not your not your full report. So you could always be able to see what your credit score is. If you want to check your credit rating every month, you can ask the credit bureaus in writing. You can send them, you fill out the application, send a copy of 2 pieces of ID via fax, and then they will mail you your report. That's the only way you can get it for free, and you can do it as often as you like. In the States, it's only once a year you get it for free. In Canada, you can do it as often as you like. But if you want to check it on a monthly basis directly with Equifax and TransUnion online, yes, there is a cost, and you can't avoid that.
And just so, if I may add to that point, Equifax says, I think for this period that we are in, they've actually made it easier to obtain your credit report, but you won't be able to see your score. So you can download your credit report. You won't be able to see your score. So it's only good for 30 days. So you feel free to visit equifax.ca.
Mhm.
You've got a link where you can actually download your credit file, which you'll be able to get
Yeah.
instantly.
They're still asking for a credit card though, right?
No, so they've actually opened it up to during this time only, I think, for the pandemic period, to allow people to get access to it as quickly as possible. I've actually done it, so
Yeah, that's good.
I feel people can do that the same as well at equifax.ca.
Okay.
All right. Can you choose to keep the credit card as secured?
Say that again.
Can you choose to keep a credit card as secured?
Not really. I mean, normally the secured credit card is secured for 6 months to a year. It actually depends on the creditor, the length of security. So it's up to them. My advice would always be like, if you don't want to over extend yourself, then don't ask for a credit limit increase. A lot of the banks now need to ask whether you want a credit limit increase or not. I'm always being asked when I go to the ATM machine, do you want us to increase your credit limit? And I always say no. But it's up to you. So that's the best and safest way to keep your credit limit low, and therefore you can control um, your debt a lot better.
Okay. And I think we'll take a couple
Oh, yeah.
questions. Can you negotiate a settlement with CRA?
Good question. CRA is different. So just so you know, CRA is Canada Revenue Agency, and they are above the law, which means that you could reach out to them and explain your financial situation. Now, if your situation is one where it's like you've had a terrible year where maybe you had a fire in your house, maybe you had a death, or you were let go or fired, or you became very, very ill, and you can prove all that, you can always contact them and say, I'd like some um, forgiveness. And what you're asking is, you're asking them to forgive the penalty, maybe to reduce the interest, but they will never ever not charge you what's totally outstanding of your debt. So sometimes the debt could be 500, but the penalties, because you haven't paid it in over a couple of years, can be extremely substantial. So that's what you can request, that they reduce or eliminate. But the actual outstanding debt will never go away, and no, you cannot negotiate.
So thank you, Elena. I know that there's a lot of questions that people have, and we could still go on for a couple more hours, but in the interest of time, we will end it here, and feel free to follow up with us. Today's webinar has been recorded, and we'll share the webinar link with you, as well as the handouts that Elena had mentioned. And we welcome you to revisit the content yourself and share it with your networks. Also, you'll be receiving a webinar evaluation at the conclusion of the webinar. So we
Okay.
really appreciate your feedback, as this will assist us in planning upcoming webinars and addressing any other issues that you may have. So it's very important that you let us know, take the time to complete that evaluation for future planning of webinars. So please check out our upcoming webinars on our website at www.accessccf.com. We have another webinar coming up next week, which will be focusing on managing business cash flow. So if you are a small business owner or you have a business right now, it's important that you attend and share it with your networks as well. So thank you so much to Elena for her time and giving us expertise, and we hope that you learned a lot from this session, and we welcome you to keep in touch with us and with Elena as well if you have any additional questions following this webinar. We wish you a safe and wonderful day. Everyone keep safe, and thank you for joining us again. Thank you, Elena.
Thanks, Otis. Thanks, Otis. And I look forward to hearing from you guys. Take care. Have a good day.
Bye, everyone.
Bye-bye.